Likus, and welcome to Abstract Cafe, where the essay trade, thought pine lab, and every conversation explores the art of thinking beyond the obvious. And today I have my special guest, one of his advocacy consistently delivering high standards without exception, none other than Mr. Pietro Canestrelli. How you doing? Welcome, Mr. Pietro on Abstract
Thank you.
Cafe.
Thank you, Daniel.
Yes,
Love being
yes,
on it.
yes, thank you. And can you please introduce more about yourself that I missed?
Yes, I am Pietro Canestrelli. I am a tax attorney based in Southern California, Temecula, California. My credentials is I've been a tax attorney for 27 years now. I started my career with the IRS as an attorney, and I worked there for 6 years. I did not enjoy that work. I wanted to actually help taxpayers. So I've been in private practice for about 21 years. I have saved millions of dollars for my clients, and I focus on two areas of tax. I don't do returns personally, my firm does, but I focus on one, tax planning, professionals and business owners, how to legally lower your taxes. Um, and then the second thing I do is focus on what is called tax litigation or tax defense. And that's when the IRS audits you, and there is an argument as to um, how much you owe. So I have an LLM in taxation law, which is a degree beyond the normal law degree. I am a certified tax specialist with the California Bar, and I'm also a certified tax coach. I am also an author of America's Tax Defender, Tales of Taxpayers Who Fought the IRS and Won. And it's filled with all sorts of information about how the IRS actually works and how taxpayers, with our help, was able to fight the IRS and basically win their cases. So um, we everything tax. And the book is available on Amazon. So if anybody's interested, just look for America's Tax Defender or my name, Pietro Canestrelli, search, and you'll find it right away.
Yes, and thank you so much for sharing your knowledge and wisdom to the world, Mr.
Thank you.
Pietro. Thank you. And today let's talk about opportunities for business owners and the
Yes.
new tax bill. What it's all about.
Yeah. So the new tax bill, the OBBB Act or the One Big Beautiful Bill Act, you have a legislation that's both a bill and an act, which is kind of funny, the term for it. It was kind of an omnibus bill, had a lot of different provisions, but it had specific tax provisions. And the the basic idea is, you know, the 2017 Tax Act um, is pretty much extended, and they kept everything in place, which was supposed to what is called sunset, meaning the provisions would go away. Um, so the OBBB basically allowed the 2017 Tax Act, which was very business friendly, to remain in place and made some of the provisions permanent. So if you like the 2017 Act and if you're a business owner, you should, you're going to like the OBBB. Um, some of the things they did, some of the key provisions for businesses, and I'll run through really quick, is, the big one is bonus depreciation. Okay, 100% bonus depreciation was basically made permanent, brought back in and made permanent. What does that mean? Bonus uh, 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 depreciation. Well, when you're a business owner, you're allowed to deduct business expenses, but for big um, equipment and qualified production, property, and those type of things, you usually have to what is called depreciate them and take a depreciation deduction. So let's say you bought a big, um, you bought a giant computer system for $100,000. You usually have to depreciate that over. You can't take $100,000 deduction in the year you bought it. You usually have to string that out over multiple years, say 5 or 7 years. Okay, that makes the deduction worth less each year. With the bonus depreciation and the Section 179 expensing, you basically are allowed to take that full deduction for the amount you paid for in 1 year. So, and the hope is, and the reasoning behind it is, we want businesses making big purchases. So we're going to allow them to deduct it in 1 year versus over many years, and that's huge in a lot of industries. If you're a doctor, you have a medical office, you have a much bigger deduction when you buy that expensive piece of equipment. Or if you're construction, you could buy a very expensive piece of, dirt mover or that sort of thing, and you're allowed to deduct it all in 1 year. It makes a huge difference to your taxes. Okay. Another huge, huge opportunity for businesses is the research and development credit. And what the OBBB did was allow you to deduct the full amount of your research and development expenses in 1 year versus, again, kind of expense them over, a multiple years, with a amortization type schedule. That means that if you have, you racked up $100,000 worth of research and development expenses, you could take a deduction on that full amount, and it's about 20%. And the credit, it's a tax credit, um, versus a deduction. And the difference between a deduction and a tax credit is a deduction lowers the amount of your taxable income. Okay, suppose you have $100,000 of taxable income. If you have a $10,000 deduction, you lower your taxable income to 90,000, and then you're taxed on that 90,000. A credit, on the other hand, if you have $100,000 of taxable income and you're taxed on that, and let's say 25%, a $10,000 deduction would actually lower the amount of the tax by $10,000 if you have a $10,000 credit. So credits are very important. And one thing in particular about the R&D credit in the OPB, is that it's basically worth, 3 or 4 times what it was worth before the OBBB, because you don't have to depreciate it over time. So it's really worth, for businesses to look into this credit and see if they qualify, because it's worth so much more than it did before the OBBB. And there is one study that says that only about 30%, only about a third of businesses that qualify for the research and development credit actually actually apply for the research and development credit. So there's huge opportunities that are being missed by a lot of businesses. Other things that are in the OBB is that they made the qualified business income credit, the QBI, it was set to expire. They made that permanent. Okay. They also um, they also increase the state and local tax deduction cap, which was and this had a lot of people were angry about this. They increased it from $10,000 max to $40,000, which was a big difference. Another opportunity for people who are thinking about selling a business or selling an asset and having a huge gain. One way is that they did extend the business opportunity zones. And that's the way, say you want to sell your business but you don't want to pay all the taxes. Well, the opportunity zone allows you to defer any taxes if you invest your 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 um, your profit in that sale into an opportunity zone business, and that could be real estate, that could be an actual operating business. It gives you a lot of latitude to do that, and if you hold on to that opportunity zone, you for a certain amount of years, you're allowed to completely not have to pay taxes. So there are, in essence, there are huge opportunities for business owners in particular. In the OBBB, you need someone who understands that, a tax professional, to kind of guide you through, and especially prepare for 2026, the year coming up, because to do proper tax planning, you actually have to do planning. It's not a retroactive type look back and then try to change things around on your return. You actually have to do things during the year to have the best type of tax planning for you.
The best tax planning indeed,
Yeah.
Mr. Petro. If you had to summarize the bill's underlying policy goal for the business
Hmm.
sector in one sentence, what would it be, and how should owners
Yes.
align with that intent?
Find a tax professional that understands the 100% depreciation, understands R&D, understands business opportunity zones, who is going to sit down with you and analyze what you have and actually plan out 2026. So you are only paying, as much tax as you're legally required to do. Um, Huge opportunity, but it's an opportunity. You actually have to get out there, find somebody, and make sure you take advantage of this opportunity. You never know. Politics is politics, and things change all the time. Maybe next year or a couple years from now, these opportunities won't exist, and your taxes will skyrocket. So take the opportunity now, and talk to a tax professional. You can certainly reach out to our office, but there's a lot of tax professionals out there that understand this. We're one of them, but please take, because keep in mind, income taxes are the equivalent to profit. Meaning, if you save $1 of income tax, you are in essence making $1 of profit, because your income tax is based on your profit. It's not based on your gross revenue. So you could make your business much more profitable by doing tax planning. And the wonderful thing about tax planning is, unlike other things in your business, a business, you have to spend money to produce your goods and services. You have to spend money on marketing to market your product or services. Um, so unlike other ways to get more profit, where you spend more money on marketing or you hire more people or you buy more equipment, tax planning, you don't have to hire anybody. The investment is very low compared to the return on investment. All right. So you don't have to expand. You just have to have a tax plan.
Yes, you need to have a plan for your tax, people, for
Yes.
the efficiency. So let's talk about the immediate expensing provisions. What
Mhm.
qualifies? What are the limits? And what are the smart strategic purchase business might make now that they would not have considered before?
Yeah. Like I said, if you are if you could buy equipment, and if you have a projected to have a large tax bill, if you could buy equipment before the end of the year, I strongly suggest you do that. You'll get the 179 full depreciation on that. Now, exactly what qualifies is a little complicated. So you're going to have to talk to a professional. But in general, vehicles over 6,000 tons, any type of expensive office equipment, any type of medical equipment, any type of construction equipment, all of these things that it's December 16th when we recorded this. These are the type of things you could do to really save you taxes. And don't forget about the things that have been around for decades. Don't forget about a deferred compensation plan. If you don't have an IRA, an independent retirement account, or if you don't, your company that you own doesn't have a 401k or some kind of other deferred compensation plan, you want to set it up. If you have one set up, really figure it out how much money you could stuff in there. And just to backtrack, a deferred compensation plan basically means that you put money into a retirement account. The business is allowed a deduction, a full deduction on its taxable income for the amount put into the account, but you're not taxed on that account. Okay, in the case of a 401k and a traditional IRA. So there are opportunities that are beyond, that are just tried and true. But again, these are opportunities. You actually have to take action as a business owner. A good business owner should have a tax planning strategist, should have a good attorney involved in their operation, should have a good accounting and bookkeeping and insurance person. Don't try to do it all. Find people that have a business coach is another one um, that that's on this podcast a lot. Business coach is another a specialized person that is going to help a business owner. Don't be the business owner that tries to do everything themselves because you don't have the expertise in the area. You don't have the time to do this either. Reach out to tax professionals and other professionals to take full advantage of the opportunities that are presenting to you.
Yes, take the advantage, people. Hire the
Yes,
professional. Which specific industry or sectors are most uniquely positioned to leverage these new rules?
I really think that anyone who is working with AI, artificial intelligence, they're either directly involved with AI, meaning they they are creating AI content, that sort of thing, or they use AI for their marketing and their production and that sort of thing. There's an enormous opportunity to get a tax credit. And that's the research and development credit. If if you're into AI and you're spending money on AI, the research and development credit is for you. Okay, you need to look into it because you are spending money on testing AI, and you know it's a test every time you do it. You are experimenting with the AI in order to make it work for your specific business. So all of that, all of those expenses should, or a lot of them should be should be available to take a credit on. So other areas where I've seen people just not do great tax planning is medical. Whether you're a doctor or a dentist, um, you're buying a lot of equipment. You have a lot of, again, experimentation. If you own a medical practice, you really need to talk to a tax planning specialist. Now, keep in mind, some people might be thinking, "Oh, well, I have a CPA. They prepare my returns. They do my bookkeeping." A tax preparer is not a tax planning strategist. Okay, it's two different functions. Meaning, a tax return preparer is going to look back to the previous year and correctly prepare a tax return to reflect that past year. And that is their function. They do this very well, and they're more than happy to do this, but they're not focused on tax planning and tax strategy. You can't do a lot of things great, and tax preparers do, accounting and tax preparation great. They don't do the strategy part well because it's just not their business model. So find a tax strategist, a tax attorney that does tax planning and strategies to help you out. They don't have to do the tax returns. They don't have to do your accounting. You're going to still need those people on your team, but a planner and a strategist is going to make all the difference in the world on how much taxes you pay. And again, how much taxes you pay determine how much profit you make in your company. How much money you could take home, spend on yourself, you could reinvest into the company. It makes a huge difference, especially on low margin, company, businesses, restaurants, that sort of thing. Your margin is your profit margin is low. Anything you could do to increase that is going to help you either survive or thrive. And we want you to thrive.
Yes, we need to thrive, people, by
Yep.
choosing the right tax.
Yeah.
And Mr. Petro, how do the changes to capital gains and carried interest affect investment and exit strategies? Should a founder thinking of selling in 3 to 5 years start planning differently today?
The OBB didn't change it all that much. There's still a lot of opportunities for founders. There's still a lot of ways, especially like you said, Daniel, if you're thinking 5 years in the future, there are ways to mitigate your capital gains event. And keep in mind the rates are what they are now, and that could change by a new law. And we're going to have elections in. It seems we have elections all the time, but we're going to have elections in a couple of years now, and
Hmm.
that might change the landscape completely. So if you're talking 4 or 5 years, you really want to hedge your bet and prepare to go one way or the other. Some of the best ways to do it is, you know, like I said, the economic opportunity zones is one way. Another way is a 1031 um, type. Um, if you're big into real estate, do a 1031 deferred like kind exchange. Another way to save a lot of taxes is to sell it to your, employee stock ownership plan, an ESOP. That's another way to do that. Another way is to, invest in something else down the road, and that's again the opportunity. If you want to cash out, that's the worst. You really have to look at what you need as far as income. That's part of tax planning. There's a lot of ways that you could not have that huge taxable event where you sell out completely and you get a huge chunk of cash. It's the worst way to do it because that huge chunk of cash is subject to capital gains. There are other ways to transfer your business, you know, and have more of a stream of income with a lower tax burden deferred over many, many years. Okay. Another way to do it is, hold on to everything you own until you pass away. And then your heirs get what is called a step up in basis in the assets and the businesses and the other asset, meaning all that capital gain that accumulated as you built up the business over 20, 30 years, your heirs gets all of that washed out when the property is transferred to them. So there are many, many ways to skin the cat, so to speak. But again, you have to talk to your tax planning person. Let them know what you want to do. Okay, that's number one. I can make up a lot of tax plans and a lot of strategies, but if it doesn't jibe with what the person actually wants to do, their goals, it's worthless. So that's the first thing we talk about when we bring in a client. We talk, what are your goals? What do you want to do in 5 years? What's your end goal for your business? And everybody's in a different boat. Some people have children they want to leave the business to. That's actually becoming more and more rare. Most people want to sell the business and not, in a way, burden the children with with the business. Some people still do, but most don't. Other people want to have a business that is easier to manage, meaning they want to change their asset from like an operating business where they got to grind it out every day to something that's more passive. It generates passive income. That's something they like. We're here to make your goals come true in the most tax efficient way possible. So again, there's no size fits all, but we'll get you where you want to go, and we'll make sure you pay the least amount of taxes.
Yes, indeed. And Mr. Petro, to wrap up our discussion for
Yeah,
today, looking ahead, what are the key indicators business owners should watch that might signal further changes?
you always have to look at elections, both at the federal and the state, because I'm in California. California has a different tax regime. They're talking about a tax on just ownership of, everyone who has $1 billion. They're going to have a tax there. You have to look at changes to the law, proposed changes to the law at the federal and state level. We are constantly looking at that. I mean, daily, we are looking at things that are being proposed, where they are in the process, because it makes such a huge difference on how to plan. So look for opportunities and then mitigate when things. There's ways to plan around when law changes, but again, you have to be proactive on this. So um, I would always look at you know who's in charge at your state and federal level and what their ideas on taxation are. And tax is never permanent. There's never any permanent taxes. I've been doing this for 26 years. When I started out as an attorney in 1999, completely different landscape, tax landscape than what's going on now. And I think now is the great opportunity for business owners. I'm guessing in the future there won't be as great opportunity for business owners. So take advantage now, and then but be prepared to mitigate taxation if things change. We could always change the plan.
Yes, indeed. And thank you so much for sharing your knowledge and wisdom to the world, Mr. Petro. So, can you please invite our listeners to support your advocacy, your projects, or anything you want to promote on Abstract Essay?
Yes, if a couple things. Like I said, the book America's Tax Defender: How Taxpayers Fought the IRS and Won. It's on Amazon right now. Just search my name or America's Tax Defender, and it's a great book. And also, if you have tax questions, feel free to call us at 951-319-7674 or our website, which is ietaxattorney.com. And we could set up an appointment to discuss your issues and help you out.
Yes, people, let's support Mr. Pietro. Because if you support him, for sure more and more empowering advocacy will rise. So, Mr. Petro, thank you so much for your time.
Thank you, Daniel, for inviting me.
You're most welcome, and more to come, people. See you
All right.
soon.